The market plummets after a record run on Wednesday. Are the bulls done, or are they just getting started? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that the market had rocketed up toward the danger zone, and we were looking for heavy rejection off of that area, and that's exactly what we saw as the market dropped again on Thursday. And now the question is, are the bulls done, or are they just getting started? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, before we jump into the charts and do the indicator, I do have a question for you. Please leave a comment if you're interested. I am looking at doing a $5 one-day membership where you can get my afternoon call, so you can log in to my afternoon call for $5. We go over the ES, the NQ, the SPY, the Mag 7, gold, silver, Bitcoin, and then any stocks that you want to see. We'll go over their key levels and their big, larger term Elliott Wave coverage. You can also interact with me and find out any other questions. And I think it's a really good deal, but I want to make sure you guys like it too. So if you would be interested in that, please comment down below. Yes, I'm interested, and I would really appreciate it. Now, as always, before we jump into the charts, we are going to take a look at the results of our indicator. We have built a custom trading view indicator. If you're new here, I'll explain it when we jump into the charts. Okay, guys, so here we are on the SPY 5-minute trading view chart. And if you're new here, okay, we have built a custom trading view indicator. It is only applicable in trading views, so you do need a trading view account. You also need real-time data on the NASDAQ and the ES. And you can see on the left here in yellow is the pre-market, and on the right in blue is the post-market. You need those turned on for the indicator to work properly. Now, we don't trade pre or post-market stuff. We only trade during regular trading hours, but these levels help us with the indicator during actual trading hours. So yesterday was a tougher day for the indicator because it was a trend day down, and anyone who day trades knows that trend days are not very good. The reason is you've already got a big gap down to start the day, and we don't chase that gap down. So what we're looking for is for them to find some sort of low and build off of it. And if they don't do that, we get what's called a trend day. Now, I do want to do a little bit of training on this because I get a lot of questions about it. How do we identify a trend day? So we identify it early on. And what we're looking for is, you can see over here, the pre-market low was 530.70, this yellow line right here that comes across. And the first thing we want to see, if it's a trend day down, of course, we want to see them break the pre-market low. So they did that here. And then we want to see all back tests of VWAP and the EMA 21 fail. So the EMA 21 is the blue, and it is really your indicator of the trend. They can go to VWAP, but most of the time the 21 is going to be what holds. And then VWAP is the line in black here. Now, on the first bounce, they come right into those levels. They fail, and they break this low. So that's what's important. They broke below the pre-market low, back-tested the 21 and VWAP, then broke below the regular trading hours low, okay? And then at that point, we're pretty confident that we're going to have a trend day on our hands. And as long as all back tests hold the 21, we should see continuation to the downside. And then once they break the 21 over here later in the day, they hold the low and continue back to the upside, right? So once you identify a trend day, you can chase. That's not me, because a lot of trend days can go like this. And the first part of the day did do this. A lot of trend days can just go like this down, and they get really hard to trade because it's too choppy. So we don't chase the downside. However, I do have traders that like that kind of trading, and what they do is, instead of getting a sell signal, because you're not going to get a sell signal here, it's already deep into sell mode, it's looking for buys, is they trade the LSs as sells, just like we do on our swing trades. So the LS would be a sell, which would be a winner. This one would be a loser. This LS was a winner, and then this LS was a monster. Now, full disclosure, I don't trade that way. That's not the way I use the indicator, but I do have traders who do that and do very well doing that. Biggest point here is how to identify a trend day so that you don't try to chase all these buy signals against a day that's just not going to give it to you. We had stopped trading over here pretty quickly in the day, and then the market continued to cascade lower. So on trend days, it's good to sit on your hands and wait for a better trading day. These are just not good day trading days in general. So the indicator, not a great trading day, but that's part of it. You're going to have good and bad, mostly good days. As you can see on the screen, we absolutely killed the first quarter. We have guys that call it a cheat code. I mean, this thing is absolutely helping hundreds of traders beat the market, and as I said, the good days far outweigh the bad. You can go watch all of my videos. We have tons and tons of winning days, which is how we beat the market so badly in the first quarter. We had a $29,000 first quarter based on a 100K account, so a 29% win for the first quarter. Really awesome stuff. And that's what we're looking at for the indicator. Now, I want you to be a part of this, and if you want to be a part of this, here's how you do it. There's a link down in the description. Click that link. It will take you over to our membership plans area. As you can see, with the code IND25, you can get $25 or 25% off of your first month. If you scroll down a little bit, you'll see my monthly rooms, and then just below that, Trading View indicators. $59 a month, $590 for the year. You get 2 months for free. And guys, they both come with a 30-day money-back guarantee. So here's the deal. You can get the indicator. You can paper trade it. You can watch it. You can just let it go for 30 days and see if you like it. You'll never lose a penny trading because you don't have to trade it. You can just make sure it works. And then if you don't like it, send it back to me and say, hey, it wasn't for me. I'll give you your money back. Or you'll be like 99% of people who get it and keep it and use it and crush the market. Guys, it's an incredible tool. It's forward-based price action trading. I think you're really going to love it. I want you to have it, so check it out. All right, now let's jump into the charts and take a look.
So before we get into a few things, I realized today was right around a year ago when I told you guys to get into gold and precious metals, and we got out of the S&P for our 401k programs. And when I started doing this, I gave trades out and stuff, but my initial plan for starting to do this was to see what was coming in the S&P 500 and try to convey that risk to the consumer and to the average person who might not see it coming and might lose everything, and try to help and save as many people's retirements and overall portfolios as I could. That was my whole goal in this. That's what I wanted to do, because I strongly believed that when this was several years ago, that in the next several years we would be seeing a massive topping event and the S&P melt down in a way that no one would think possible. And so a year ago we got out of the S&P on January 29th. So if I put this on here, so on January 29th, I told you guys I was selling half of my last third, and that was on January 29th of 2024. And then the market, obviously kept going and went up about 25% from there. So from this 4,900 level to 6,117 or whatever the top was here is about 25%. Not too long after, some people asked, I said, hey, I'm getting into precious metals. And some people asked, when can I get back in? And I said, once they made the April lows here, once they started back up, I said, this is a safe place to get in as long as they hold this low. So many of you were able to still capture much of this move up if you weren't able to get into precious metals. But in the last week, we have seen ourselves decline back to the level we got out at. Meanwhile, on the gold side of things, if we go over to gold, from that same time period, so on 4/15, tax day as it was, as I mentioned last week, that gold was a good place to be with 401k money until we got a buying opportunity or any precious metals fund of some time. That was right here at about 203. Gold is up 45% and still up 45%. The market is back to even. I sincerely hope that I was able to help many of you save your retirements from this massacre that's happened over the last few weeks, grow it bigger than the S&P, outperform the S&P, and feel confident in your money moving forward. That is my sincere hope, because that is my whole goal in doing this, is not so much the day trading to build wealth and the swing trading to build wealth. That's all great. That's all amazing. I love that part of it. But my main goal was to protect people's lives. Your 401k money, your retirement money, that's stuff you saved up your whole life so that you could stop working and live your life. And to have it go away in 3 days, or get cut in half in 3 days, or cut down hard in 3 days is jolting to a lot of people. And I think we're just getting started, honestly. So I hope some of you experienced that. It's been a year now since we entered precious metals. The run has been incredible. And that's why I do this. So I wanted to go over that and just kind of share that it's been a year, and the year's been pretty dang amazing in my opinion, and I hope you guys were on that ride too. Most of the value I want to give is in the long-term effects. You know, a day-to-day trade to me is irrelevant in the big picture. How I can live my life and take care of my kids and move on in the later portion of life and not have to worry is far more important. And I think a lot of people are going to find that to be a huge mountain to overcome soon. So um, I hope you guys see the value in that and what I provide outside of just the day-to-day. Here's trading. Okay, so let's go back to the charts here. Let me get this back on ES. So early on, let's go over to SPY real quick. Early on, we were already in a gap down day. The buyers were struggling to get anything going. We got smoked 3 times, 4 times here. And once that happened, and then they rejected here and started to move down, there was no point in, for me, in trading because there was 2 options for today. You could definitely do something like this. It kind of grinded slower, or you could do what we did and then do that. I didn't see much hope in buying opportunities working out, and we definitely weren't going to get a sell after a gap down like that. So that's why we stayed out. Again, if you're a person that likes to trade the long stops on these types of days, those were going to be hard too. This was going to be a hard first few hours, but this one worked out really well. And that's why I don't trade these, because you can get a lot of these super choppy days in both directions, and then you're just getting killed in both directions. So on the 5-minute chart, I just trade the buys and sells, and then when they're not working out, I move on with the day. So I hope you guys did as well, or at least caught the move down off this long stop if that was the style you traded. Are you holding cash now? Still have any position in your 401k? That is always listed in active trades. I have like 1/6 of my money in the S&P, and the rest, most of the rest is in a gold heavy precious metals fund, and then a little bit in cash because I like to have cash in times like this. If you were willing to give guidance on long-term management of positions in commodities, I would find it very valuable. I hold long-term holdings of gold, silver, and wheat in my retirement account. I'm always willing to give you what I can see on the charts at the time, and you're welcome to ask on any given day what those are doing, and if you want to specify, hey, I want to know what they're going to be doing over the next few months, we can look into that. It is, to properly break down a chart, you do need a fair amount of time. So I can't do everything like that on here, but I'm happy to give you what I can see on the charts for, long-term setups for those types of things. Going back to the ES, so we had let's clean this up and get into a little more usable format. We had a 5 down, but they obliterated that because of the extension. So, once it extends so far past your first 3 waves, as we'll see here in just a second. Actually, let's go into the 5-minute for that. So if you counted off the high here as 1, 2, they moved into the 1382 here, which is great. They backed it up to the pivot. That's good. They brought it back down to the 2.0 here at 53.14. They bounced it to 53.70, which is what I was looking for, and then they brought it down for a low. The problem is that low extended. So this is way too long to be a wave 5. So now we're looking at it as a wave 3. So it's an extended wave 3. So off this high, we do our fib retracement, and they have shot up past 382, but they're still within the 50% and now moving back down. So if they make a low here, definitely very possible to be a bigger 5-wave move down toward that 5,000 area, and that would be even more concerning if you're a bull, because man, in 2 days they have put together an insane amount of movement in this market. This harkens back to COVID, and it's You know, it's really incredible how fast and how far they can move this market. Um, so I could view this a couple of different ways now that they've extended. So the current count could be a bigger, you know, 1, 2, 3, 4, 5. It could also be, if I delete that, could also be if we trace it from the top and count this as more of a 4. Um, it's not an ideal 4, but if you do a 1, 2 like this, they just hit the 1618 and traced it back up to the pivot and are coming back down, and that would still target about the same area. So it doesn't change the target too much about the 5100 area or so. Um, and it would be viewed at that point as like a 1 of C, I think. I would like it to be a little longer, to be quite honest with you, because you really want wave 1 of C to get closer to the lows, and then 2 of C, and then 1 of 3, 2 of 3, and breakdown like that. But it's certainly possible you get a shorter wave 1 and a more extended wave 3, especially with all the movement. Now, if you said what would I be leaning toward overall, it's really hard for me to sit here and say that we are going to make a wipeout move in 2 days. Let me zoom out so we can see better. When you look at the MACD on higher time frames, it's really hard for me to want to believe that they're going to have one move up, leave the MACD as bad as it is, and still continue down in the way that we would continue down from here if we break these lows. So I do think it's very possible that this is A, B, C of A, and then you get like an ABC down maybe into this 5,000 area or so, and then a C back up into our box before we see this. I do think that's, I would say, slightly more likely. That would be my primary count at this point. Uh, and it's like 55-45, you know, 53-47 is certainly not overwhelming, but it's just hard for me to believe that with all of the selling, that they're only going to give you a one flash rally. And I realize it was a huge rally, but time is more important in some of these cases for the market to be able to reset. So it would shock me. No, it wouldn't. It would slightly surprise me if they're going to build this setup to the downside right now. I still think that's the primary. I still think that's likely, but um, I do think we could see another push higher first. If we do get a push higher, the bears need to hold that 58.40 area. Above that starts to shift back in the bulls' favor, and they can make all-time highs again. For that to happen, we would want to see them break above this high, and then ideally you'd want to see them back test it and then push out, and that would take us up to that 63, 6400 area. I drew these a little big, maybe more like that, but into that 6400 area. That certainly could be possible. I would say right now, if you draw your fibs, you're looking, even if they found the low right there, 58.22 is the 1.0, which would be right at the top of the box. So certainly possible for them to find a low around here and push higher. But those are the two main paths that I'm looking for right now. Not the bullish path to new highs yet. That would take a change in character of the market. But A, B, C for A, B, C, then down, or A, B, C, and then we're starting down right now. I realize I just drew a mess on there, but I think you get the idea. Any questions? Sadly, my employer doesn't offer precious metals in our retirement. That sucks. Sorry, Daniel. Does the monthly MACD have any bearing to you? I don't traditionally use it. All MACDs have bearing on their chart. I'm sure the monthly is probably way overbought in all honesty. Um, yeah, so you had the 22 highs, and then you had these highs on monthly divergence with a monthly cross here, which is very ugly, by the way, and still well above the zero line. So tons of room to the downside for the monthly. You can see in 2009, which was the last major bear market, they brought it all the way down to negative 176. So tons of room to the downside on the monthly. But in general, you would want to see, even then, we had, you started that move in 2000, they took it down, and then they still healed and brought it back up before the major crash here. And they can still do that, where the initial crash takes us to like the COVID levels of the MACD. So if you look at the daily MACD, we zoom way out here. The COVID levels were all the way down to negative 237, and this market, quite frankly, is moving like the COVID market did. It's moving 5% in a day, 4% in a day, 10% in a day. So it's certainly not impossible for them to come down here and check this low before they head back up in a more direct manner. It's just unlike that's the only time in history we've ever gone that low. The last time we were even kind of here was January of 22, or the 22 lows, I mean, excuse me, October and March of 22. So in general, the initial move down here was to 83, and then they gave you this really nice healthy move back up over time here to heal, and then they smoked it to the downside again. So same thing here before they made the final low. They healed it, brought it back up so they could sell into it again. So it's just a little odd for them to take it directly down, but certainly not impossible. It's happened before. It happened during COVID, and this is moving kind of like that. So yeah, I mean, I will still give the bulls the benefit of the doubt to try to slow this down a little before it speeds up again, but it's certainly possible they can't, especially if you consider, and that, this is a strong consideration. We are selling off of a major ending diagonal, which generally sells straight down. One of my major contentions of the top not being in was we didn't sell hard enough off the top, but it just took them a while to get going, I guess. So it's certainly a possibility that they take it directly lower here. If they do take it directly lower, as we look at the fibs for that, we would be targeting more of the October 22 lows, I believe. So no, the October 24 lows. Our 1.0 comes in about 41.38. I believe those were at about 41.38, right? So right below. This is October 23. So right in between them, actually. So the October lows here were 4,018, and these are ES. Obviously it's lower than that on the S&P because of I believe it was like 3,600 on the S&P, something like that. Because of the contract rolls, these get moved up, but it's still the same amount of drop on the chart. So right in between the two lows, closer to the October 22 lows, though. So here's 23, and here's 22, and the 1.0 comes in closer to this wave 4 here, which makes a lot of sense, actually. Now, the bullish path from here, if they do fail, so if they aren't able to make any kind of upside, the bullish path would be that this is a much larger degree wave 4, and we're off by a degree here, so this wave 4 would move over 1, right? And then we'd come back up in 5. That is certainly a possibility, although I think it is a low likelihood at this time. I think a bounce off of this area is extremely likely, but I don't think that, and a strong bounce at that, I don't think they'll come down here and not bounce extremely strongly. I don't mean that they're going to go right back to the highs by that. I mean that they're not going to go like here and then continue. They're going to grind it for a long time back up like this, and then they'll start, the next phase. In the first option, would you expect another low around 5,000 before a C wave up? The first, yeah. So this would be A up would be yesterday's rally. The end of A up would be yesterday's rally. B would be the move down, and I would assume they'd want to bring it a little lower than they have it now, toward 5,000. If they don't, it's still fine. Like I said, it comes in right at the top of our box for the 1.0, and then we'll see what kind of pullback we get then. But yeah, I would think a little lower is where they'd like to be, but that you don't always get what you want. Cal, I just went through that. And the second option, can you show that once more on the chart? Second option, is that the more direct path? I don't know which one's the second one. Oh, Cal said I just answered it, okay. The second option, I assume, would be the more direct path. In that case, this is A, B is already in, we're in 1 of C, 2 of C, 1 of 3, 2 of 3, and then 3 of 3 will get like that. Any other questions on the ES? All right, let's go over to the NASDAQ. So the NASDAQ also blew through its 0.5 retracement of 3, so this is very unlikely to be a wave 4. On the NASDAQ, if we look at our fibs for the bullish case, if this is going to be all of A from yesterday and this move down today is B, then you have C targeting 20,880, which is slightly above where we would tend to look for that C wave to be. So I would expect them to want to come lower here first, down into maybe the 17,400 or so area. If they come down to about 17,400 or so, I would think would be where they want to target if they're going to go back up. That would be the bull case where this is a bigger ABC. I have the C up here, so it actually look more like this for a short-term bull case, not long-term, just the short-term, where they go B and C like that. However, if they are already starting the down move, which again seems quick, but certainly can happen, I would want them to make a little deeper of a wave 1 here. So in either case, I would really want them to come down into the 17,004 to 17,000 area. Whether they do that or not is to be determined. But those are the same paths. I mean, the NQ is always going to have basically the same paths as the ES because they trade basically in step. But the NQ, the thing about the NQ is it got very close to our target box yesterday. 19.5 was our target area. They got to 19,377 or so, right around there. So they were within 100 or so points of our target area and then turned down strongly. So they were the one that I said likely make this bigger ABC tougher. So if this is going to be A, B, and then we get C, they're going to have to drop it down more for that to happen. It's certainly possible, but from this level, you would not want to see them start higher if you're bearish because they can blow through the target box, and that could turn bullish after that. And it's certainly possible they overshoot the target box. Again, NASDAQ always famous for big retracements and then come down. But if they overshoot, back test to do that, that's bullish. Is the NQ the fly in the ointment for the bulls? As I said earlier, they have gone straight through that double top from Monday and Tuesday. No, it's just an ABC. I mean, double tops to me are meant to be broken, so I would not consider that anything other than an ABC. I think A actually needs to be over here, but either way, um, yeah, I don't see that as any issue. So which one are you leaning towards? That yesterday was A, and now we are in B, and then C up for a bigger B. Very, very slightly. Like I said, maybe 53.47, 55.45 in that direction, just because of the time factor. However, when we looked at the COVID MACD, they can certainly take it lower. It's certainly, there's no rule that says the MACD can only go so low. It's just common practice that from the levels it's at, it would generally need time and space to heal before the next major move down. So it's certainly possible that they can take it down directly, and then we get, the bigger bounce that would heal it then. But for me, that would be one, extremely accelerated, and two, just you've only seen that one other time in history. So not impossible, but certainly not. The odds are not in the favor of that. We went through the Mag 7 yesterday, pretty in depth, I believe. Somebody asked for gold. One thing, guys, XLF continues to get beat. SMH getting killed again, giving up all of its gains back under 200. Nvidia getting beat. So everything getting beat down pretty hard today, giving up a lot of its gains. Not all of them. Obviously they're fighting for that April low. This box here is the April lows, and they continue to kind of work around it. So they rejected it a couple times, trying to come back down through it. But we're still below major support on a lot of charts. And until we break back above that, and then above the major resistance is really the key. That will be when we turn things over. Somebody asked for gold count. So gold, so we zoom out here. So we are in a 1-2-1-2 breakout on gold. So you have 1-2-1-2. They break out. They hit the 1-2-3-6 at 268. They got to the 1-3-8-2 at 282. I said if they push through that, the next target is 303 or 305, right in there. They're approaching that. They're at 291 right now. So very direct move out of gold here. An exaggerated wave 3, which is kind of what you expect here. That's one of the reasons we moved our money into gold. Was this is a huge setup and very expanded wave 3. On any pullback, as long as they hold from here, as long as they hold 250, 246, which is what we've been talking about for a while, which is also this support right here, gold is still in really good shape to make another push up to a minimum, I think, of 340 to as high as 360 or even 394, just depending on how it all plays out. In the short term, as I've said, from this area, generally you would expect a pullback. However, it is a wave 3. They do extend. So until they pull back, obviously pressure remains up. But on any given pullback, we would like to see them hold the 246 level as low as 223, another good support area here. But 246 is really the level that would be ideal to hold for gold. So no longer term swing long. Not yet. If we get a setup for it, then you'd put potentially, but no, not yet. Silver, Still battling these highs here. So they've been chopping up right here on silver. They had a really nice 5 up pullback, and then you kind of have this pivot chop that they're in right now. We're looking for them to get to 33 to 37 next. But they still need to break out over these pivot numbers here that we've been talking about for a while. So as we zoom in on gold or silver, excuse me, we've been talking about this high right here and getting above it, and until they did, chop was the answer, and that's where we're at. So still just chopping sideways, and silver looking for them to break out above the 1.0 into the 37 area. Could certainly still see a little bit bigger of a pullback on silver, but as of right now, we're looking at this consolidation period waiting for them to break out. Typically in late stage metal runs, silver outperforms gold. It's obviously not doing that right now in any way. So perhaps on the next gold pullback, silver is able to start to move with it. Bitcoin, been chopping for a while. We've talked about those magical levels. If we zoom out just a little, let's go to the daily on Bitcoin. So they're still saying just above this consolidation area. Let's move this up just a little. Still holding this low. I said that they could easily come back into the 60s if they break down. They got to 74 so far. This is where they really need to hold to continue in the most bullish path. They don't have to hold this area, but backtesting this breakout area and holding is certainly bullish if they can, but they got to get back above this high here at 88. Then they got to get back up over 100. And then once they do that, we should see them looking at 115 to 130 on Bitcoin. If they cannot do that, then things start to look ugly on Bitcoin, and you look at something more like this into these lows here at about 50. And that could be the start of a bigger move down. I mean, Bitcoin's already lost 31,000 off of about 30% or so. I mean, that's a rough guess, but it's like 27% off of its high. So certainly in dangerous territory on the move down here on Bitcoin.
Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it'll take you right over to our website. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, and they both come with a 7-day free trial. That's because I want you to get in there. I want you to make sure you love it and become part of the trading team before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking us out. We also have our educational material. If you scroll down a little further on the page, you're going to see our indicators, which you saw in the first part of the video, and also our courses. We have our Trade Waves Academy course, and right now I am giving 50% off of this course if you get the yearly indicator. So if you buy the yearly indicator right now, you're getting 2 months for free on that, and then you get Trade Waves Academy 50% off. In Trade Waves Academy, we go over all of the things that are outside of Elliott Wave to put a complete package together. We go over market psychology, capital management. You can see all the modules here on the screen. Options trading basics, candlestick patterns, how to trade price action, bull and bear traps, how to identify market reversals, fib levels and why they're important, how to identify key support and resistance, and trade setups and proper risk reward. All of this comes inside of Trade Waves Academy. On top of that, you get our Elliott Wave for Beginners course included in this price, and you get the Advanced Elliott Wave for free included in this price. So for $497, you get all of those modules I just said, plus the Beginners course, plus Advanced Elliott Wave. It's an incredible deal, and you can get it for half off right now if you get the yearly indicator. Now, as I did mention, we do have our Advanced and our Beginners Elliott Wave courses. In our Advanced course, we're going through a lot of the things we're seeing on the charts right now. A lot of those things are the advanced fib levels, the diagonals, double and triple threes, flats, triangles, trading Elliott Wave, which right there, that is worth the price of admission. People don't understand that there's 2 paths and how do you trade them if there's up and down. It's because you trade setups, and there are very good setups in Elliott Wave Theory. You have to know how to spot them and trade them, and we talk about that here so that you can understand how to do this course. Now, I understand if this is too advanced. You can see, though, that our traders love it. But if you need to get started at the beginning, we have our Elliott Wave for Beginners online course. And this course is really helping traders understand a complex market in a way that makes sense. It's extremely confusing when good news makes the market go down, bad news makes the market go up. It stops at random places. You don't know what's going on. That's because the news cycles were garbage. Elliott knew this long ago. He knew that key levels mattered. It's not random, and it's you're able to find these key levels, and this is what gives you a huge advantage over the rest of the market. In this course, you get 25 videos where we go through your introduction. We have to introduce you to Elliott Wave Theory. We have to get your mindset right and give you the KISS method, how this works and why it works. It's very scientific based. People think it's just, oh, you just make a wave up. No, very scientific based. It's outstanding. Chart setup and tools. We go through all of your chart setups, every tool you need to use with Elliott Wave, how to use it and why we use it, and then the Elliott Wave for beginners area where we go through each of the waves, how to find the key levels, how to understand impulsive and corrective waves, how to know where to get these measurements, the corrective depth theory, the theory of alternation, the pivot, everything you need to make sense of an irrational market. Now, the really cool thing about both of these courses is there's several ways to get them cheap or for free. You can get them both at a $37 discount with our Elliott Wave course bundle. You can get them for free in our Trade Waves Academy course. If you buy that, they are included in that course. Or if you just want to get them at a low monthly cost, you simply get one of our monthly rooms, as the Elliott Wave courses are included in this price. In our first room, the Invest with Jacob room, we give you all of your real-time market updates, all of your buy and sell alerts, all of your Elliott Wave questions are answered. The midday video that you watch in these calls, that's live for everybody in these rooms. And then you get the beginners and the advanced course included in this price. We trade the SPY and the QQQ, and we swing and day trade. So we do trade quite often in my room. Now, if you're looking for futures trading, individual stocks, income trading, and advanced trading, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as the individual stocks, the futures trading, his income trading method that just kills it, and his reduced risk binary method that gets you in at a cheap price, gets you huge multiples on your money, and it's how he structures that trade that's so unique. That's why you get a 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. Thank you for watching. We'll be back tomorrow with your next market update.